Owner of DPL Surveillance Equipment. We're a full-service surveillance and security equipment company. We have lifetime guarantees and warranties on all the products. 24/7, 365 tech sales and customer support. We have perhaps the largest inventory of items that not only can you buy, but you can rent and layaway as well. And also we have a huge video library. Humongous amount of articles, educational articles, and articles about the products and services, blogs and podcasts, just an abundance of information. The reason, but that has nothing to do with why we're here today. The reason why we're here today is because we just want to bring to the attention of our listeners and people who like to watch our videos and such, that we're also interested in the cryptocurrency space, because we think that's the next major technological revolution going on out there. And we firmly believe that this is going to change the way money is transmitted, the way transactions are handled, the way privacy is affected in the very near future, especially over the long term, but even in the very near future. Now, some of the things we want to go over include, but are not limited to, stress tests. We're going to be talking about price discovery analysis. We're going to be talking about valuation models, etc. Now, getting right into stress tests. Stress testing, for those of you who are new, just refers to the idea that in the traditional financial markets, for instance, banks have been undergoing and are undergoing stress tests. Now, the reason behind stress tests is basically to ensure that we don't have another 2008 financial crisis. In other words, the banks that didn't do very well in 2008, they claim to have solid financial balance sheets, and they claim to have enough assets and cash on hand, or just enough assets and basically a backstop just in case there was a problem. Okay, this was the assumption, but it didn't work out that way. It's just like me or you claiming to have enough money in the bank, claiming to have enough money to pay the rent or pay the mortgage for let's say 3-6 months, and then you find out later on that you don't have enough money when there's a crisis or emergency. So when you have a financial crisis or emergency in your personal life, you can fall back on your savings account or some liquid assets to help pay the rent, pay the mortgage, make sure you eat every day or whatever, right? But that didn't happen in 2008. The banks claimed to be in a better financial position. They claimed to have more solid balance sheets than they actually did, okay? So what happened is as you all know, they were bailed out to the tune of at least $700 billion, and the taxpayers and everybody footed the bill for that nonsense, okay? Now, in the cryptocurrency space, what we're trying to do now is we're trying to borrow a lot of these ideas, a lot of these concepts, to make absolutely sure that if there is indeed a crisis or a situation where we could endure a prolonged recession, depression, or any other type of financial crisis, for instance, that we have the capability. And it doesn't necessarily have to be a financial crisis. It could be a technological disruption of some sort. Internet going down, hackers and disrupting services, etc., etc. These stress tests, which are actually ongoing right now, and Bitcoin actually already underwent a major stress test. There are some individuals going out there right now as we speak, and they're stress testing various blockchains. They're going to be looking at Bitcoin Cash in the next up and coming few weeks. Okay, so we're gonna find out exactly how secure, how strong, how resilient the Bitcoin Cash blockchain is. Okay, maybe they'll pass with flying colors like Bitcoin did, and maybe they won't. They're gonna the hackers are going to attempt to force. I think they said force multiple forks of that coin and see what happens. Okay, whether or not they're successful or not, we'll have to see. But my point with this session is just to let you guys know there are various tools out there that we're going to be borrowing from the traditional classical financial markets, and we should take a look at these tools out there. For instance, one valuation tool that we use a lot of you, including myself, we go on to coinmarketcap.com, and we take a look at how they rate these cryptos in terms of their market capitalization, and a lot of people put a lot of emphasis on what they find at coinmarketcap.com in terms of who's ranking higher or lower. And a lot of people are not satisfied. They're just not convinced that that's a good way of rating or ranking cryptocurrencies. Okay, and believe it or not, that's what happens in a free market. You have some companies who come out with ways of looking at the various metrics, whether it's weighted for total number of shares outstanding, or in this case, total number of cryptos outstanding, actual crypto coins outstanding. How many are held by insiders should be factored in, and how many are yet to be issued, and all that. Whether or not there's a limited supply or not, those things are also factored in, right? So what the CoinMarketCap is trying to do is they're trying to borrow a classic tool from the traditional classic financial sector or markets, and they're trying to apply that to the crypto market. Sometimes it comes across and it seems to make sense, and sometimes it just doesn't give us a proper idea in terms of what the valuation should be in the case of coinmarketcap.com. So in the meantime, what I've heard, and you guys can verify it for yourself, I heard that there are other competitors to coinmarketcap.com, and those guys are looking to, supposedly they have better ways of valuing those types of rankings. Okay, so keep your eyes and ears open, and we're going to find out that these tools are kind of constantly being challenged and critiqued, and we're going to have competitors. We're going to have an arms race whereby more and more companies are going to be using different models, different ways of using those metrics and looking at those metrics to do the things that are done in the classical financial markets. Okay, another area, another metric rather, is going to be how do you discover the appropriate price for a digital asset such as a cryptocurrency. In other words, right now Bitcoin is trying to find some sort of intrinsic value, if you will, in the traditional. See, I'm an old school investor, going way back and to the days of Warren Buffett and Mario Gabelli, Peter Lynch, Graham and Dodd. These are very old school fundamental investors. At least that's the model that they use to achieve their success. And fundamental analysis basically states that there's some sort of intrinsic value associated with most things that you're going to be putting money into, whether you're buying a company, accumulating stock or whatever it is, you should have some sort of intrinsic value. And right now, I think the markets are trying to figure out what is the intrinsic value of Bitcoin. Maybe it's somewhere between, who knows, $2,000 and $20,000, or who knows, it could be $50,000. No one knows for sure what the intrinsic value is. But whatever the intrinsic value is, it typically means that the price, even though it could fluctuate all over the board, it's trying to get back to some level of equilibrium. In other words, despite all the fluctuations and gravitations or gyrations or whatever you want to call it, these gyrations and fluctuations are going to try to get back to this certain point where it stabilizes more and more. So, again, we don't know whether that's 3,000, 10,000, 50,000, or whatever it is. At some point, Bitcoin is going to reach a level of equilibrium, and it's going to try to stabilize at that point. Now, because it's such a new asset, and because it touches on so many different areas, 3 or 4 different federal agencies could classify it in three or four different ways, and they're not sure whether or not it's a commodity or a security or a currency or what the hell it is. Okay, so there's a lot of conflicting forces out there that are affecting the proper valuation of Bitcoin. And as the sector matures and grows, we're going to start to come up with better and better tools that determine and evaluate what it is. I was listening to I think it was a video with Thomas Hunt and was this Nick Bhatia, Bhatia. They were talking about Bitcoin's Lightning Network and how that is undergoing sort of a metamorphosis into a payment channel, if you will, that will someday attempt to reward people for opening up, I think, if I'm stating this correctly, Lightning nodes and get paid for it. In other words, the Lightning Network is based upon people actually depositing a certain amount onto the Lightning Network to keep a channel open. And if I'm not stating this correctly, then maybe you guys can come in and correct me. But the basic premise is that you get more and more participation when you actually earn something. Now, this could ultimately imply that the Lightning Network and the payment channels consisting thereof are going to someday reward people a type of interest. Now, I don't know what the government regulators are going to have to say. Everybody's going to get all nervous and panicky about centralization and dominating factors coming from the major players like J.P. Morgan and everybody else who can afford to plunk down $1 million or so and monopolize payment channels. But again, this is very, very new technology. Bitcoin and cryptocurrency, the industry overall, is very, very new. No one can predict where this is going to go. So this is why I'm coming out with this particular podcast. Don't get your feathers all ruffled up thinking that you need to defend this angle or that angle when no one knows ultimately how this is going to unfold. Okay, we're still trying to figure out all the applications and future applications of Bitcoin and cryptocurrencies. Who's going to be playing what role, when, where, and how? These things have yet to be determined. We don't know. Just like horses in a horse race, they jockey for position. And eventually you're going to have some horses in the front and some going to drop back, and that could change at any given instance. Same thing applies in the crypto space. The players and the horses, if you will, are going to be jockeying for position over an extended period of time. And certain technologies are going to take off, and certain ones that you think will take off, they won't take off because ultimately consumer sentiment and demand and such, and usability, all that's going to play a very, very critical role, okay? If people gravitate towards this or that innovation in the crypto space, it's because they figured out that it is relevant to them and the way they operate, and they will embrace it. But who knows? Maybe you will embrace certain things as important to you as a business or entrepreneur or investor, and certain things will mean absolutely nothing to you in the crypto space, and you will attach absolutely no importance to it. So, again, as this industry evolves, take a deep breath, stand back, and try to be a little bit more open-minded in terms of whether or not we're headed in the right direction, and whether or not certain technologies are important or going to be a big issue or not. Because believe it or not, a lot of people get very, very negative and very apprehensive about what's going on in this space without sufficient information or education. If you don't believe me, go to the Bitcoin obituaries. You will see probably 300 different doomsday scenarios where a lot of negative nannies were complaining about certain things having dealing a death blow to Bitcoin, and the number of death blows that Bitcoin has obviously survived, numbers in the hundreds, up to about 300, okay, death blows that were supposed to take Bitcoin out. So again, whether it's Bitcoin being disrupted somehow by EMF or EMP, electromagnetic pulse bomb or something, whether it's going to be quantum computing, whether it's going to be just someone cutting off the internet or something, or whether it's going to be regulation from China or banning from Russia or whatever it is, Bitcoin is somehow surviving. Okay, so I think the point is just make sure that you don't sell yourself short just because you can't see the future. Join the club. Very few people can see the future, and this thing is going to unfold the way it was meant to unfold. Now, the good news is developers are taking a look at Bitcoin, its protocol, and the way it operates, and they're trying their best to prepare it for the future. But ultimately, again, investor demand, consumer sentiment, the ability of people like you and I to embrace this technology and use it the way we want to use it, that is ultimately going to make all the difference in the world, okay? So let's go ahead and borrow these tools from traditional financial markets, see if we can find out how to evaluate one crypto against the other, see if we can figure out how to stress test and see whether or not this crypto, this blockchain, or whatever is strong as it's supposed to be. And we will all find out. We're going to all find out one way or the other who has the resiliency, the redundancy, the innovation, the developer community and support behind it, who has innovation and who doesn't. Okay, this is how you evolve. So take a look at the idea that stress tests, for instance, is being implemented right now. JP Morgan Chase, Bank of America, Citibank, a number of those guys aren't doing so well with their stress test. And they need to fix those problems so we don't have another 2008 financial crisis. And the same thing applies in the Bitcoin space or the cryptocurrency industry. We need to stress test for the future. If we go into a recession, people are going to be reluctant to spend any money at all because money gets tight in those environments. So we're going to have to depend upon long-term, stable hodlers and dedicated people who don't jump in and out, who have a vision, who want to see the way out into the future. They have a 10-year, 15-year, 20-year, 30-year time horizon where they're working on things in preparation for the long term, not the short term, but the long term. So again, this I'm gonna bring this podcast to a close, but I just want to let you guys know. Look at the traditional tools and the classical financial industries. See if we can apply them more and more to the
the crypto space, so we can figure out for ourselves how to prepare for the next 20 years, next 30 years, next 50 years, using some of those tools, and also coming up with new tools. Some of these tools are going to be so new that we'll have to invent tools because this is a new innovation. But a lot of those tools are already out there and we can borrow them. But if we have to invent new tools, then so be it, because, this is very new technology. So you guys have a great day, and we'll talk to you later. Thank you. Bye.